Hi everyone, I'm Ken from Crypto Trading KS. If you're new, welcome, and welcome back to our regular community. Let's run the numbers. Bitcoin is currently trading at 33,373, down 2.35%. Ethereum, ETH, currently trading at 22.85, down 1.21%. We notice the stablecoins USDC, DAI, USDT, and BUSD. They're kind of mixed. Green means that money is flowing into the stablecoin. Red means money is flowing out of the stablecoin. I'd just like to let you know, if you're new, everything that I do for you is free. I make my money from the markets, so I don't have any paid groups, reports, indicators. I don't believe that people new to crypto or trading or anything to do with finance should leverage. So I will never put leverage trading links up. I just don't believe in it. You need to take care of yourself. I show you how to think, how to approach your trades, and I really give you the insider information on the crypto market. Many decades of trading has taught me that if we don't know the overall market trend, we can make a buying decision or a selling decision that moves against us. I do 2 episodes every day, 7 days a week. The first is to understand what the true trend of the market is, collecting as much data as possible to assess if it's going up or down. That's really, really critical. The next video that I make is all about the market itself, what Bitcoin is doing, what Ethereum is doing, what the alts are doing, all of those sort of things. If you miss the market direction, you will put yourself at an enormous disadvantage. It's really, really important to look through this video. I'd like to introduce you to Rule 711, excellence always. This rule is the cornerstone of my life. Even though I put out this content free, I take it really, really serious because I think everything in life requires you to put in the best possible effort that you can put in. Excellence always is incredibly important as we live, as we work, in our relationships, and also incredibly important in trading and investing. Some of the greatest philosophical minds ever, such as Aristotle, who was born in 384 BC and died in 322 BC, an incredible contributor to human psychology. He said, "We are what we repeatedly do. Excellence then is not an act, but a habit." You can sum it up like this: what you do every day makes who you are. If you think about what you do in life, is it contributing to a better you? If it is, well done. That's fantastic. I would just like to reach out and thank Jonathan. Jonathan contacted me today. He's a high school business teacher from Vancouver, Canada. He mentioned that he puts his grade 8, 9, and 10 class in business education and shows the videos that we do together. I thought that's just beautiful. I wish when I was a kid I could have had some guidance how to think, how to make money, and how to be a good person. They really all go together. I think, Jonathan, what you're doing is just beautiful. And I'd like to reach out and say hi to grades 8, 9, and 10. You are so lucky to have Jonathan. Well done. Enjoy. Confucius was another incredible philosopher. He was born in 551 BC. His ideas are still known today. That's how much of an incredible contribution he made. The will to win, the desire to succeed, the urge to reach your full potential, these are the keys that will unlock the door to personal excellence. What does it mean? If we want to be excellent, we must want to succeed. We have to have a desire. We have to have a motivation. The motivation in this channel is to be more of a financial blessing to ourselves and those we love. That's a beautiful desire. That's a beautiful goal. As you get wealthier and wealthier in life, to create meaning, it's all about reaching out and helping other people. That creates a meaningful and fulfilling life. Rule 11.12, the KS process to determine the true trend. This is incredibly important. A lot of times people just want to pull the trigger and say buy or sell. The problem is, if you don't know the true trend, you can get yourself in an enormous amount of trouble. Everything in life is about understanding and critical thinking. There are no end of people telling you how to think. The incredibly important thing is to gather probabilities and assess for yourself. Rule 147, see things with no bias. This is a really, really difficult rule to apply in life, and especially in investing and trading, in money management. You can get a particular bias. You can fall in love with an investment, but the problem is the investment doesn't even know who you are. It's not really a good thing to fall in love with things that can't reflect love back to you. It's really important to be flexible. Seeing things with no bias means that we start from a neutral position. We collect probabilities, either positive or negative. We see the light, we see the dark. We form the picture, is it daylight or is it nighttime? Or is it somewhere in between? Critical thinking skills are really, really important. And this is a very good picture that sort of encompasses the key points. You need to observe what's going on. Then you need to analyze information, gather, understand, and interpret data. Then you need to make a conclusion, to draw an inference. Then you just apply it, basically. But this concept of just taking all the available data in to make an understanding is really, really important. To contextualize data, we use the KS model. The KS model is a Bitcoin technical trading model based on institutional price psychology. There are 3 sections that we look at. The sun phase, where the bull market psychology is out. The sun phase here in 2020 is called the white sun. If we go back to the green sun in 2016, that's bull market psychology. Bull market psychology is basically prices going up and the institutions will make it so. Going back to 2012, the psychology, bull market psychology, is overwhelmingly positive. When the rocket, people talk about to the moon, rockets and flying and all of that kind of stuff, it's really fun. When the rocket actually hits the moon, it enters what's called the bear market. The psychology changes significantly. It's gone from buying in the bull market to selling. And then it goes into what I would call terror, which is the capitulation event. Bear markets are comparable to bear markets. Bear markets are not comparable to bull markets. This is because bull markets are overwhelmingly positive in psychology. Bear markets are overwhelmingly negative in psychology. Now, let's get into the data. Before we start, I'd like to do a shout out to Jager. Thank you very much for recommending this thing called Web Paint. Really nice. We have such a beautiful community. We're all helping each other and trying to be a blessing in each other's lives as well as the people that we love. It's really beautiful community. I want to extend my thanks to everyone who reaches out to me and recommends things, and I always pay attention. I read as much as I can, every comment. What I've done here is I put the blue sun and the green sun. Now, this is a hash ribbon chart. The technical side of this is not as important as what it is saying. Let's try and do some analysis. We are right here. Let's talk about critical thinking. We are right here. We see this hash ribbon, all this red stuff. I always say you don't have to have built your car to drive it. So let's go with this analysis on that basis. Do you notice this hash ribbon here and this hash ribbon here? We know we're in the psychological sunshine of the bull market. This is the psychological sunshine of the bull market of the green sun. Psychological sunshine of the bull market in the blue sun. We always compare the same psychology. We notice there's no hash ribbon, no red ribbon inside Notice here across the top there. So when I say inside, the hash ribbon is occurring before the crossing of price from the previous all-time high. That's why I've drawn this green line in here for you. Now, what's happening? How do we talk about this price in terms of what we're looking at in this diagram? We can see that the hash occurred before the run-up in price, below the previous high. The hash occurred before the previous price and the run-up to the high. Now, what's happened here? I believe it was the COVID sell-off that basically closed the world down. The excess liquidity that was pumped into the system, I believe this created an artificial bump in price of Bitcoin and indeed all assets, the stock market, etc. This recent sell-off in Bitcoin, from my perspective, is a normalization to these kind of levels. I believe the best is yet to come. Glennis, a community member, a very long-standing community member, was very sharp. She pointed out the best is yet to come. We haven't even started yet. That sounds pretty cool, but we have to use our critical thinking. We can't just take up a position. We need to see things with no bias. Is there anything else that would prove or disprove this hypothesis? Let's look at some more on-chain data. Realized cap hodl waves. We can see this wave 1 here. We look back into the past at wave 1. Hang on a second, there's wave 2 and 3. That's pretty weird, isn't it? We go back to this 1, there's 2, there's 3. That tends to support the idea that we're just getting started. But is it enough? Of course not. We need to look at euphoria. Is there euphoria? In the past cycle, in the green sun, there was euphoria up here, which is measured in this blue. You see this blue here? That's blue there. If we go back to the previous blue sun, that's why the numbers are in blue, that euphoria occurred twice because there were 2 peaks. Now, if we look at the current price, where we are, and we use our critical thinking to try and understand when this loss of green turned into a yellow, it's around here or around here, maybe around here or around here, somewhere there, probably more likely to be there, probably more likely to be here. It says that the best is yet to come. That would tend to support what we've seen in the data so far, but let's keep on checking. Let's have a look at reserve risk. What do we notice? The value is all the way down here next to the green. It's a long way away from the red. In the previous cycle, the green sun, it hit here into the red area. In the cycle before that, the blue sun, this peak here and this peak here both pierced that red. So what are we noticing? Yeah, it feels like we're a long way away from the red at the moment. Let's look at the Puel multiple. Again, we can see the current multiple is all the way down here near the green. Peaks are in the red or near the red, but not away towards the green. We see the peak of the green sun here. We see one peak, the final peak of the blue sun here, the previous peak of the blue sun there. We're a long way from peaking in here. Tends to support what we understand already. Let's look a bit deeper into stock to flow deflection. We can see this green line is a long way away from the red. We can see it's kind of like this. This is really interesting. What it's basically saying, the current position that we're in now is more like this position in the previous green sun cycle. We can see the green sun would be setting up there. Again, it's supporting. I always try to bring in as much data as I possibly can. I'm actively trying to disprove whatever the model is saying, because when we do that, we have knowledge and forewarning of events that can blindside us. It's really important. After decades in trading, I know this is critical to do. Let's look at one more. Bitcoin exchange net position change, all exchanges. This is a kind of a weird diagram, isn't it? But we look at the current price action. This is all about critical thinking and the application of logic. Always remember, you do not have to have built the car to drive the car. With that in mind, we're looking at this particular price action. We see this green spike. We see all of this red. Look at all of that red. Go back to the previous cycle peak, which is the green sun. Look for this degree of red. Okay, we can see it here. Wow, that's tending to support what we saw right in our initial analysis. We're a long way off from a peak. It's really important to understand that all markets are interconnected. So we use Rule 193, check the stock markets, to understand what is happening around us. If we fail to do this, we can get blindsided. I'm always looking into everything with a focus on excellence all the time to try and make sure that we have the most accurate data in front of us at all stages. Many people are concerned in the community of corrections. I would just like to share this quote. I know I've shared it a few times, but it's really important to understand. Far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in the corrections themselves. This is really true. If you are preparing for a correction, please note, without data backing you up, you are acting on fear. If you act on fear, the market will take your money away from you. We have to be very fearless in trading and investing. It's a thing that is acquired over years of practice. It's not easy to get, but that's the state you want to get to. Let's go the other way. Let's pretend that we were incredibly fearful and we just walked away. Have a look at this. This is from KSBitcoin.com. Great website. If you ever have any websites that you would like me to go through or to share with the community, please let me know. If it adds to the story, I will definitely include them. Otherwise, I will always analyze them and try to bring in the data some other way. We can see Bitcoin versus gold and the S&P 500. Over 10 years, the S&P 500 did pretty well, up 227%. Gold did well, up 17%. Bitcoin did a little better, up 235,000%. What about the CAGR? And you say, Ken, what's a CAGR? It's a compound annual growth rate. That literally means it grows by that percentage every year. S&P 500 grew at 13% per year. Gold grew at 2% per year. And Bitcoin, whoa, it grew at 117% per year. Even if you wanted to walk away from the market, just leave your Bitcoin in there or you leave your cryptos in there, I think you'd still do really well. I think it's useful to remember that black swan events happen. A person asked me in the community, what's under those little, red thingies? I just tried to show you a bit. So on the 12th of March 2020, we had Black Thursday when the market collapsed, COVID and the US liquidity crisis. That caused that intense sell-off there. If we go back further, we can see that there was a trade war around the time of capitulation in the bear market. Going back further, August 16, the Russian and Saudi Arabian oil price shock. That was a big problem. But these things correct. Brexit. You see, you can actually look at particular things. 24th of August 2015 was the China crash. And it's really important to understand that all markets actually impact each other. Going all the way back here to the October 2013, this was the US government shutdown and US North Korea conflict. It created this big spike down here, which was recovered inside a week. All of these black swans recover. It's really important to understand Don't be freaked out by them. They're the best buying opportunities you could ever get. So when we actually parallel performance over many, many years, a lot of those black swan events are baked into this data. I think that should help. If you're feeling concerned and worried, don't feel so concerned and worried. You're really on the right path. So let's check the markets. What I've done here is to put the price of Bitcoin as an overlay so you can see an association. Always remember, association is not causation. You need to look more independently at the data. Just because something goes up here and something goes up here doesn't mean they caused each other to go up. It may be, but always assume it's not until you can prove it out. This is the NASDAQ 100. We can see price moving in a wave going up and down, up and down. It's going up. Guess what it's going to do? It's going to move down. But it has this beautiful support line here. We would expect it to move down to support. But what is going to happen? People are going to come out of the woodwork. Markets are crashing. Markets are crashing. The market's not crashing. This is normal stuff. Price moves in a wave. Don't get freaked out by people just looking at normal price action. S&P 500, price moving in a wave, going up, it will come down. This is just normal stuff. A lot of people have said, Ken, that's a really steep angle. You know, aren't they going to crash? Remember, more people have lost money preparing for a crash than they would have suffered in the crash itself. Please don't prepare for a crash. If there's one coming, we'll be looking every day. Let's have a look at the Russell 2000. We can see there's a support line. It's a little bit weak at the moment, but there are actually reasons for that. But we can put a secondary trend line here to show the technical aspect of this. Russell is looking okay. Let's look at the Dow Jones. Dow Jones is moving up. So far, technically it's looking fine. Let's look at ARK Investment. ARK Innovation ETF is a Bitcoin orientated and other companies, but it's largely in Bitcoin as well. So ARK coming up, it's crossed across this resistance. It's making a good play forward. We look at Grayscale Bitcoin Trust. It hasn't broken that resistance yet. We notice that ARK has. Grayscale has not. This price is just being reflected in Bitcoin's price, basically. You can see, I think there is quite an association between Grayscale Bitcoin Trust and Bitcoin because, you know, it's made of Bitcoin. Just had to throw it in. Okay, we look at MicroStrategy. So Michael Saylor's company has broken that resistance and is going up. All healthy. Price moving in a wave. We always expect it to go up and down. Riot, blockchain company, has crossed across this resistance, moving to the other side, just like the other ones. A shout out to the community member who recommended that we put Marathon Digital in. It's fantastic to put other things in. Please reach out and let me know what you'd like me to cover. Break of resistance, upward support, looking pretty good. I threw this one in. This is a Bitcoin fund from Canada, QBTC. You notice the Grayscale Bitcoin Trust and this Bitcoin fund in Canada are actually doing the same kind of activity. Really fascinating. Excellence always is what we do on this channel. You can see we're covering so much ground. You will have an incredible understanding of the markets just by hanging with us. Okay, let's have a look at gold. Gold has this resistance. It turned to support but failed. It's coming up to that resistance. Resistance in the stock market is always, well, traditionally always met with resistance with the price coming down. Let's have a look at silver. We can see silver is holding up well. Let's look at the VIX. VIX tends to spike when there's volatility, major issues. At the moment, we see a low VIX. That's pretty good. That means people are not in fear. Okay, let's look at the DXY. Just a little bit of info for you there. So we see resistance here and resistance here. The dollar's done well. It's got over that resistance, come back, retested, and resumed up. Is challenging this level of resistance. It's really interesting to see that when the dollar, you see my mouse here, we're going up here, that hand, we're also going up there. We're going up here, we're going up there. We come down here, we come down here. We go up. Interesting, isn't it? Causation and correlation, we have to keep our eye on it, but it's pretty fascinating stuff. Let's have a look at the CBOE 10-year Treasury note yield. The FOMC, Federal Open Market Committee meetings, were released today. There was a lot of risk-off behavior that occurred overnight, and there was a talk of potential tapering, which means to slow the money printer from going brr, and the current state of the US economy, things about inflation. Just to let you know, yields move inversely to price. So we have the TNX, the 10-year, the TNY, and they inverse the TLT. So I'm going to show you all of these today. I think it's really fun to go through these things. So let's have a look at the 30-year. It's come down and done the same thing as the 10-year. That's really not surprising. So let's have a look at the TLT, which is the bond. What happened in here, I'm always interested in anything that could weaken the bull market case and create a risk-off event. Possibilities here. The FOMC meeting minute plans for monetary policy. It's important to understand the minutes are being released from the meeting that occurred 3 weeks ago. Potential tapering, the Delta virus concerns, these were kind of floating around in the news as possible reasons for this spike up. When we get a spike up here, it's a risk-off event. That's really important to understand. I'm going to dig deeper into that because I think it's quite good. If we look at the 7 to 10-year Treasury bond, we can see that it's going up as well. One interesting thing that I came across in some analysis yesterday was the utilities sector. Utilities are very boring, they're very mainstream, and they tend to be defensive. So if utilities tend to rally, that can be an early warning sign that we have to do a risk-off move. Again, I look at everything, and I love to share it with you. Let's have a look at crude oil. Crude oil has come down a little bit recently, but it's still maintaining that trend. Let's have a look at Brent. It's doing the same. Okay, that's pretty much the markets. Rule 10, always do your own research. I love researching. That's my favorite thing in the whole world to do. We saw that the yields were coming off and behaving a little strangely, so we need to look into that. Let's do it. I always love to go to the source, so I went to the Federal Open Market Committee. I looked at their release, which is July 7, US time. There's the minutes, the press conference, the statement. Okay, let's get into it. Starting with the minutes, look at these incredible people here. All of these people are contributing to this document. It's really good to understand there's so many eyes looking at this, but what did they come up with? We're just going to skip across to the summary of economic projections. Let's go down and understand what we're looking at. This is the median. This is the average central tendency. Don't you love the confusion that people want to cause? Anyway, the change in real GDP, they expected high in 2021 and then to lower. Unemployment rate to lower. The inflation rate to lower. Core PCE and core inflation rates to lower. Let's dig a little deeper. So the change in real GDP, we can see this is what it's been doing. It's expected to spike because the world closed down, basically. Everybody's coming back to work, and to lower. Unemployment rate was high. They expect it to lower. Let's go and check some more. Inflation to rise and then lower. This is really important because if inflation was sustained for any period of time, it could cause a lot of risk on for the markets. This is the federal funds rate. What it means, you see each little dot? That's like a person, one of those experts putting their dot on this chart. We expect this federal funds rate to increase over time, but that was always going to happen. Nobody's confused about that. Okay, there's a lot of different things in here, but I guess the major thing is to just understand that the risk that was coming through the treasuries is not actually reflected in this document. But we'll go a little bit further and I'll show you some more things which will help to just summarize. This is a recent news article from the Wall Street Journal. The Fed officials, tapering is when they stop these really large purchases. They're not anticipating doing that. That's a really important takeaway from that green highlighted box. A key piece of data from the Federal Reserve is this. The Federal Reserve will continue to increase its holding of Treasury securities by at least $80 billion per month. Not a bad thing, eh? And of agency mortgage-backed securities by at least $40 billion per month. There you go. They're not tapering. That's what all that means. The money printer is still going burr. The case for Bitcoin, the stock market, and pretty much everything is back on track. In our striving for excellence that we do on this channel, everything I do for you is to try to get you the highest quality of information in the smallest amount of time possible. You'll know far, far more than pretty much anyone else will know out there. I try to do my best to compress things for you. I hope you found this content useful. Please be aware, everything I do for you is free. I'm not going to reach out on Telegram or WhatsApp or anything else. You can always talk to me on Twitter and in the comments. I love to see your comments. Please say hi and let me know where you're viewing from. I really love to touch base with people. It's cool. If you would like twice daily updates 7 days a week on price movements in the crypto market, please subscribe to YouTube and follow me on Twitter. Crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there. Take care and see you next time. Bye for now.